What is up, YouTube? I am actually going live on Instagram, and I'm going to be answering the questions here on YouTube. So this is going to be a long video, just giving you guys all of the answers to normal questions that I get about infinite banking. So go ahead and, if you haven't, hit the like, subscribe, so you can get more of the content when I put it out. So let's go to the questions on Instagram. Who has questions for your boy? What can I answer for you guys about infinite banking, how it works? Real estate, I can get into that as well. Private lending, that's something that I do a lot of. So looks like the first question we have is one of the first guys that got me questioning financial processes. Oh, no, this person is just saying that I got him questioning financial processes, and thank you for that. So that is huge, guys, is current financial wisdom, like the wisdom that everyone has. You got to question those things, because if you think about it, most people are broke. And why is that? They follow certain dogma. They follow certain things that everyone does. If everyone does it and everyone's broke, why would you do it? Like putting money in a 401k, saving money in the bank, going to school to get a good job. All those things that we're taught about money are complete lies. So thank you, Keep Row, for that comment there. B-Dubs13 says, how do you get started? So to get started with infinite banking, it's really quite simple. You just have to put money into a properly structured whole life insurance policy with a mutually owned company. Then as you start putting money in, it's going to keep growing. The more you put in, the more you can use. So that's the main thing. You got to start putting money in. You got to fund or capitalize on your policy. The bigger it gets, you're building a storehouse of capital that'll never stop growing. It's guaranteed to grow. It's protected against lawsuits and judgments in most states. And you can then borrow against it, and it'll keep compounding and growing like you never touched it. So you then use it to become your own bank. If you guys want to learn exactly how that works, I've got an entire training video. It's the link in my bio on YouTube, on Instagram, on TikTok. You can go ahead and check out that link. It's Infinite Banking. I'm going to put it in the I'm losing the words right now. I'm going to put it in the description of this video. So you'll get it there as well. So you can go ahead and see that video. At the end, you can schedule a call with someone on my team so we can help get you started. Does this work in Canada? Someone asked. So great question. It does work in Canada. Infinite banking works in Canada. It's a little different because the policies in Canada are a little different. I'm not licensed in Canada, so I can't speak 100% facts on it. However, I do have a company that I would refer you guys to if you wanted to do this in Canada. I know the owner. His name is Jason Lowe. The name of his company is Ascendant Financial. So reach out to them. They can structure policies the same way I talk about and help you with the infinite banking concept. Someone asks, how much do I need to get started? Great question. So the minimum for this to work is going to be your age times 10 per month. So I'm 37. If I was to start, I would need to put in at least $370 a month for this to grow enough to be able to use it for infinite banking. If you put in less than that, it's just going to be anemic. It's not going to grow enough to really do anything. Even if you just put in the minimum, you have to understand that it's going to grow very slowly because you're not putting much in. You can only borrow against what you put in. So if you put in 370 bucks, you can't use much because you only put in 370 bucks. So that's the minimum. The more you put in, the better, because it'll compound and grow faster. You can use more right away. So the goal should be, how much can I put in? You should always be asking, how much can I put into this policy? not what's the minimum. So hopefully that answers that for you guys. Next question, what is the best life insurance company to sign up with? This is a great question. Guys, the agent is more important than the company. Reason being is because the agent has to know how to structure the policy for infinite banking. Most agents have no idea how to structure them because the companies, they don't teach agents how to structure policies like this. Main reason being is because the commission is so much lower. Think about if you owned an insurance company. Would you train your employees, your agents, how to make less money? No, because then they would just go somewhere else. So companies don't train their agents on how to do this. So you can't really go to directly to a company and find an agent that knows how to structure it. And even if they know how, they're not going to want to because they're going to be giving up most of their commission. So they're going to try to sell you on a policy that pays them more commission. So the agent is more important than the company. However, once you have the right agent, that agent can actually write policies with different companies. For instance, I'm licensed in 46 states and I am appointed, which means I can write policies for several different companies. Really, really good companies that work for infinite banking: One America, Lafayette Life, Guardian, and we use Security Mutual in New York. And we used to use Mass Mutual, but they're not on board with infinite banking because they don't like policy loans right away. And that's the whole point of infinite banking, is to put money in and immediately use it. So the main companies I write policies with: One America, Lafayette Life, and Guardian, I would say. Reason being with those companies, they're very stable. A-rated companies, been around for 100+ years. And throughout those years, over 100 years, they have paid dividends, which means they're profitable every single year. Through the Great Depression, through World War I, World War II, the meltdown of 2008, COVID, you name it, these companies have been profitable. And if they're a mutually owned company, when they're profitable, they pay you a dividend. That dividend goes towards your cash value, so you just have more cash. Hopefully that answers that for you. Let's see, we got other questions here. A bunch of them popped in. Look at this. Appreciate you guys. Can I start infinite banking while having bad credit? Absolutely. Infinite banking is you becoming the bank. Think about with a bank, when you go to borrow money from them, they check your credit, they want you to show financials, all that stuff. With infinite banking, when you borrow against your policy, there's no financials, there's no credit checks. You ask for money, doesn't matter what it's for, you get money. The easiest loan to ever get. So you do not need good credit. Let's see. Nice hat, melon all day long. Yeah, these hats are dope. If you guys don't have melon hats, they are amazing. They float in water. I wear this to the gym so you don't get sweat marks and all that stuff. They're great hats. A little expensive, overpriced, whatever you want to call it, but great hats. So let's see. Do all whole life policies have cash value? How do you know how much compound interest is growing? Great question. So whole life insurance policies will always generate cash value over time. Regular whole life insurance, if it's not built for infinite banking, will take a very long time to create cash value. So with specially designed policies like the ones I talk about, you have instant cash value. You can have really, really liquid policies. The more liquid they are, the slower they're going to grow in the long run. The less liquid they are, the faster they're going to grow in the long run. So it just depends on what you're looking for, but the structure of them is really important based on what you're looking to do. Let's see, we got, how do you start infinite banking? Everybody talks about it, but they don't say how to do it or where to go. So Felix the Barber, he asked that, if you watch any of my videos, I explain in 60 seconds on my Instagram, my TikTok, how the process works as much as I can in 60 seconds. After every video, I always say, if you want to learn more, check out the Infinite Banking link in my bio. It takes you to an in-depth video how this works. And then you can get on a phone call with me or someone on my team so we can help set the policy up for you, answer any other questions you have. So Felix, I talk about it all the time. And I say every time, if you want to learn more, check out the Infinite Banking link in my bio. So go ahead and do that, and we'll answer all your questions, get on a call with you. So whole life earns interest, someone asked. Yes. So whole life insurance policies pay a guaranteed interest rate. It's tax-free. The reason why they can guarantee that is because these companies play the long game. They're not trying to get rich quick. They understand when they insure somebody, they're not going to insure someone that has cancer or is on their deathbed, right? They do their homework. They make sure they insure someone that they're pretty sure is going to live a long time. So they're not going to have to pay out a death benefit for a very long time. What they do is when someone puts in premium, it goes into a general fund. When basically they have really smart people called actuaries. They're basically engineers, and they'll look at everything and say, we think that this many people are going to die this year. It's going to be this much death benefit that has to be paid out. So they'll earmark that amount. The rest of the money in the general account, they'll go invest it into very, very conservative investments. Bonds, they'll lend blocks of money to banks. They'll lend on real estate deals, developments, things that are very, very conservative. The developments can be a little less conservative, but it just depends on the deal. So the insurance companies, they know how to protect and preserve capital. So for that, they give you a guaranteed interest rate. And as they're profitable, as they make more profit than they thought, they get dividends paid out to their policyholders if it's a mutually owned company. So hopefully that answers that for you. Would my insurance company that I do business with work? I don't know, John Diaz, because I don't know who you do your insurance with. So again, I said this earlier, guys, the agent is more important than the company. The agent has to know how to structure these policies the way I talk about, or it's not going to work. It's just going to be for the death benefit. The policies I talk about, they're not for the death benefit. They're for the cash value. The death benefit is just the cherry on top. Ooh, this is a good question. Should my wife and I have separate policies? Great question. So short answer, yes. Reason being, and this is if you both are healthy enough to get a policy. You have to be healthy enough because they won't insure someone that's not healthy enough. So if you both have a policy, it makes sense because the policy is not built for the death benefit, as I just mentioned. However, it still gives a death benefit. So God forbid anything happened to my wife, I get a tax-free death benefit on the policies that are in her name. Anything happens to me, she gets a tax-free death benefit on all the policies that are on me. So it always makes sense if you are married to protect the other person's life, because at the end of the day, we are our biggest asset. I'll just put it out there right now, guys. I'll make just under $1 million this year. Let's say I never make any more than that. That's the most I ever make for the rest of my life. I'm 37 years old. Let's say I work until I'm 67 years old. That's 30 years. If I make $1 million a year and I'm to die tomorrow, that's $30 million that my wife will no longer have because I am no longer able to work because I passed away. So it's very important to protect that asset, your life. So that being said, it should always be when you're married, have one on both of you so that you're both protected in case, God forbid, something happens to the other person. Let's see. How do you leverage the concept when you are doing the BRRRR strategy or just buying a single family home? Man, this is a great question. I'm going to try to explain this as easy as possible without confusing anybody. So the way I do the Burr method is I buy the property with hard money. So it's not my money, it's a hard money lender. So I buy the property with hard money. Then I renovate it with private money. So I borrow from a private lender. Again, it's not my money, it's their money. I get those private funds from the Private Money Club, which I will put in the description here, so you guys can get into that club. It's basically just a site that brings people together. It's like a dating site for money, people that have money and people that need money. So if you're a real estate investor, you don't want to use your own money, you can actually get your deals funded on the Private Money Club. So that's what I do. Private money pays for all the renovations. So what I am liable for is to pay the hard money and the private money lenders interest. So most investors, what they will do is they'll pay that interest out of their pocket. What I do is I don't pay it out of my pocket. I borrow it against my insurance policy. So let's say, easy math, let's say it's going to be $10,000 in interest I have to pay to the private money and the hard money lenders. Let's say over a 6-month period. I'm just throwing numbers out there. If I were to pay that $10,000 out of my pocket, that means I have $10,000 of my money in that deal. However, all I do is I borrow from the policy. So $10,000 from my policy pays the lenders the interest. The only money I have in the deal, because I'm borrowing against my money, against the money in my policy. So $10,000 of my money is not being used. I'm borrowing against it. So I'm getting the insurance company's money. I use that to pay the lenders their interest. The only thing I've got in the deal is the interest I have to pay to the insurance company to borrow their money. So in most of my policies, it's 4 to 5% interest. Let's just say 5%. If I borrowed $10,000 at 5% interest, in 1 year's time, that would be $500. If it only took me 6 months, that means the only money I have in that deal is $250. That's how I use the infinite banking concept with the Burr method. So once I've done all the renovations and everything, I don't refinance, I sell the property to my wife because she's W-2 employee, very easy to get approved. So I sell it to her as the end buyer. That way I can bypass any seasoning guidelines. When it comes to a cash out refinance, you generally have to be on title for like 6 months, bare minimum, usually a year. So if I'm done with the property in 6 months and I have to wait another 6 months paying interest to these lenders, that doesn't make sense. I can just sell it to my wife. My entity sells it to her. She brings a down payment. That goes to the mortgage lender. I just pay her back the down payment because all the proceeds come to me, come to the LLC. So I pay her back her down payment. I pay back the hard money and private money lenders, rinse and repeat. So hopefully that made sense, guys. That's a high level way I use infinite banking with the Burr method. So hopefully that made sense. Let's see. Can you speak more on the concept of borrowing against it? Who are you borrowing from? Under what terms? Great question. So when you borrow against your policy, you are borrowing the insurance company's money. And you're doing that as an advance of your future death benefit. So think of it this way. When you put money into a policy, it's building equity in your policy. You can use that equity for whatever you want. And you're borrowing against that money. So if I've got $100,000 in cash value, I can borrow all of it out, but the 100,000 never stops compounding because I'm not borrowing it. I'm borrowing against it. So It's just the collateral. My money is the collateral to get a loan from the insurance company. Here's the craziest part is since the loan is in advance of the future death benefit, I never have to pay it back. I'm not going to live forever. The insurance company knows that. They know I'm going to die at some point. So if I never pay back the policy loan, they're just going to deduct it from my death benefit. So let's say my death benefit was $1 million and I borrowed out 100 grand. If I never paid it back, they would just deduct that and the interest from my death benefit. So you never have to pay it back, but you should. And the terms of the loan, there's no repayment terms, but there's interest that accrues. It's anywhere from like 4 to 5% on all my policies. So easy math, if I borrow $100,000 and I don't pay any of it back for the entire year, it's going to be about $4,000 to $5,000 in interest to borrow that money. So all you're going to do, guys, for this to make sense is if you borrow at 4 to 5%, just go make more than 4 to 5%. That can be with doing an investment. That could be with paying off debt that is more than 4 to 5%. So if you have a debt that's like 6%, you pay it off, just take whatever those payments were and pay those back to your policy, because now you're getting the 6%. It took you, let's say, 4% to borrow the insurance company's money. So you're paying them 4, but you're getting back 6. So you just keep the difference. That would be a 2% spread you would be injecting into your policy to give you more cash value. So it's very simple, guys. It's just simple banking. And you're just using a life insurance policy to do it. What is the max amount you can put into a policy? This is a great question. The max that you can put into a policy is determined on how much you make and what your net worth is and all that. So if you work at McDonald's, you've got no properties, you've got no net worth, you're not going to get approved for much of a policy. So basic general rule of thumb would be whatever your gross income is, you should be able to get approved for around 50% of that. So if you have $100,000 a year of gross income, you should be able to get approved for around $50,000 of annual premium, into a policy. If you've got a bunch of net worth, that can help you get more into a policy. So it's hard to say what the max is because it's case by case with every person. Hopefully that makes sense. What else do we got? Is Hawaii one of your states? Yes, I am licensed in Hawaii. Is Pennsylvania? Yes, I'm licensed in Pennsylvania. How did you build your Insta and TikTok? This is a great question, guys. How did I build my Instagram and my TikTok? Really, it comes down to giving value. I learned something in 2020 that was very valuable. It was the infinite banking concept. I learned this concept during the lockdown when COVID happened. Like everyone's just at home. I'm sitting here thinking, I got to learn something new. Let me work on me. So I was reading books. I was listening to podcasts, watching YouTube videos, and I heard a podcast about the infinite banking concept. Blew my mind. I was like, this is amazing. I got to go down this rabbit hole. I started literally just researching as much as I could about it. The more I learned, I was like, this is a no-brainer. So I got my first policy in May of 2020. I started using it as a way to do my real estate deals. And I was blown away. I was like, I got to tell mom and dad, aunts and uncles, brothers and sisters, friends. I mean, I'm telling people in the most unopportune times, people I don't even know. So once I actually got onto TikTok and just started making videos trying to help people learn this concept, it blew up like that. And then I started watching like YouTube videos on how to get a viral video on TikTok. It's a lot about making a good hook, hooking people with something at the beginning. So like I've got a video that's got like 6 million views, and it says, when you buy a car, you should never do this. And it shows my cars. People love cars, right? So then they think, oh, when I buy a car, I should never do this. What shouldn't I do? And then another clip. So one last thing about that. Every time I do a video, if you guys watch my videos on Instagram and TikTok, a lot of times I have a lot of different scenes, a lot of different clips of the video. And if you notice, every scene, every clip is only one sentence. It keeps it visually stimulating instead of me just talking the whole entire time like this. That's why I've kind of had a hard time with YouTube, but it's always different scenes. So it'll actually clip to something else and keep it visually stimulating so people stay on the actual video and listen to the value I'm giving. So when you buy a car, you should never do this. Next clip. You should never pay for the car in cash. And I have a wad of cash I put on the table. And then you'll get people that are like, wait a minute, I shouldn't pay cash. Dave Ramsey said I should pay cash. Then you get people commenting, oh, this guy's an idiot. He doesn't know what he's talking about. Dave Ramsey says this, Dave Ramsey says that. A lot of social media platforms are based off engagement. So you want to get people engaged. You almost want people to hate on you. As bad as that sounds, guys, I have so many haters and I love it because the haters, they help the algorithm. They're engaging in my content. So it pushes it out to more people that are actually going to listen, that are going to learn. So that's it, guys, is you want to hook people at the beginning of your videos and give them valuable content. If you don't feel like you have anything valuable to give, you can become more valuable. Read books, watch YouTube videos like this, listen to podcasts, go to places where really successful people are at and learn from them. Become more valuable. And when you become more valuable, it's like a cup. You can only fill up a cup so high before it starts overflowing, right? So fill yourself up with value, fill yourself up with knowledge. It'll eventually start spilling over to other people. The more people you help, the more successful you become. So think of it this way. Because of social media, in order to be extremely wealthy, you have to have attention. People have to know who you are. And if you don't get on social media, if you don't put out content, quite frankly, not a lot of people are going to know who you are. And therefore, you're not going to be super successful. You're not going to be uber rich. Think about like Kim Kardashian, right? Everyone knows who Kim Kardashian is. She has a lot of attention. So she could slap her name on a lipstick that she's never used, knows nothing about the lipstick, and that lipstick is going to sell millions and millions of units, or whatever you'd call it, whatever a lipstick is, right? It would sell a ton of them, and she would make a ton of money because she has a lot of attention. So get on social media, guys, become valuable, and give that value to other people. The more people you help, the more successful you become, flat out. So that's how I grew my Instagram and my TikTok. I just gave value. I learned how the algorithm works, and then I ran with it. So hopefully that answers your question. Let's see. If I put in $100,000 and then borrow 75,000, who pays that back when I die? So if you never pay back your policy loans, I touched on this earlier, it'll be paid back from your death benefit. So if your death benefit is $1 million and you took out a policy loan of 100 grand, never paid it back, the death benefit's going to pay that back, and then your family will be left with the difference tax-free. I am licensed in Hawaii. Does this work in India? Unfortunately, guys, this does not work overseas. It does not work overseas because of how insurance policies are, how they are out there. They're just not the same as they are in the US and in Canada. So the only places the infinite banking concept works is the US and Canada. Let's see. How do you feel about drop shipping / Amazon stores and e-commerce? I don't think they're a good bet, just because people that I know have been scammed and have lost money on them. So they could be good. People that I know have gotten taken for, so I don't believe in them because of that. Oh, it's a great one. How did you build your page so fast, and how did you overcome the fear of what other people think? So I just touched on, guys, how I built my page very quickly, helping other people, giving valuable content, getting over the fear of what people think. That is huge. That is so huge because, guys, I was very, very scared to get on in front of a camera when I first started doing this back in late 2020. I remember being in my backyard in my house, and I'm like trying to record videos, and I'm holding up my phone, and I'm like, how do I hold it? Which side of my face should be showing? Like, what am I going to do with my hands? Like, people are going to think I'm so stupid. Like, who am I to give this information? I was in my own thoughts. And one thing that you have to understand is that when you're giving information, if you know within your heart that the information you're giving and the information you're sharing comes from a place of love and service to other people, it doesn't matter what anybody thinks. If you know that you are doing it for a purpose to serve other people, you should never care what anyone thinks, ever. Especially because those people don't know you. They have no idea who you are, what you're about. They don't know you whatsoever. And since they don't know you, and if they don't know you, they don't care about you. Like, if you died tomorrow, they could care less because they don't know you, right? If they don't care about you as a person, why care what they think, right? Just come from a place of love, come from a place of service to others, and the right people will feel that. They'll feel that you are authentic. They'll feel that you are genuinely trying to serve them. So you should never care what other people think, especially if you don't know them and they don't know you. So hopefully that answers that question for you. Does this work in the UK? Like I said, unfortunately, guys, it does not. What company do you deal with in New York? So my New York clients, I am licensed in New York. I deal with Guardian. That's who I write policies with in New York. New York is a tough, tough state because of all of there's just a ton of guidelines and laws and everything like that. So New York, I do not like writing policies in New York, but when I do write them, they're with Guardian. All right, so this is a great, great question. Can I put my paycheck into a policy instead of into the bank? No, unfortunately, you can't. So you cannot do like a direct deposit from your employer to the insurance company. Excuse me, it has to first go to a bank. So you can have your direct deposit go to your bank, and then you can have it directly go from the bank to the insurance company as your policy premium deposits. You can do that. It just can't bypass a bank, unfortunately. Swizzy922 says, can I start when I'm 17? Unfortunately, you cannot own a policy if you are a minor. However, your parents can be an owner of a policy. Like, for instance, I own 3 policies on my daughter. I'm the owner. She's the insured person. When she is 18, I can assign the policy to her. And now she owns the policy. So you can get your parents to do a policy for you. They would have to fund it. Or you can give them money to fund it. So if you work, you can give them the premiums to put into it. And then once you're 18, they can assign it to you. If you have kids, guys, this is one of the best things you can do for your kids, because compound interest, it takes time. The longer you give money to grow, the bigger it gets. So think about kids. They are younger than you and I. They have longer to live. So my daughter, she got her first policy at 12 years old. I got my first policy at 35 years old. Think about that. She has a huge, huge head start on me for that money to compound and grow. So I put the money in the policies for her. I use the money because I'm the owner of the policy, and I'm teaching her how to use them as a banking system. So for instance, she's 15 this month, crazy. Next year, she'll be 16. We'll have to buy her a car. How am I going to buy the car? I'm going to borrow against her policy. And then whatever that car payment would have been from the bank, I'm going to tell her, look, you have to make that same car payment back to your policy because that's her bank. It's going to go back into her policy. And she'll get the interest that she would have otherwise paid to an auto loan. And here's the craziest part. She'll be learning how to use infinite banking. She'll have all this cash value building up over time. I'll assign it to her when I know she can use the policies and not mess them up. Now she never has to use a bank. If she wants to go to college, she can borrow against her policies to go to college and pay herself back instead of paying the bank. If she wants to buy a house when she's older, she can borrow from her policy and do it that way. So it's one of the best things you can do for kids, and you can get policies on kids when they are, I'm not 100% certain on this, but I'm pretty sure it is immediately. As soon as they have a social security number, you can get a policy on your children. So literally as soon as they have that, you should be good. And if that's not the correct answer, it's like a couple of weeks tops, and then you can get a policy on them. So hopefully that answered that for you. Let's see. All right, guys, it looks like, oh yeah, can my kids have the benefit? So yes, just answered that. Can I transfer my current whole life policies cash value to another policy that is set up for infinite banking? Great question. You can do that. It's called a 1035 exchange. So you're exchanging one insurance policy for another one. So you can definitely do that. You just want to make sure a couple things. You want to see like what your surrender charges are. If it's an indexed universal life, they have like 10 to 15 years of surrender charges, which is ridiculous. So you just want to make sure if that's the case. If it's whole life, you should be good. So if you want to learn more about that, click the link in my bio, click on infinite banking, and then register for my free training video. At the end, you can schedule a call with myself or someone on my team, and we can go ahead and get everything structured for you. All right, guys, I am actually going to jump off here. I've got to get some other things today, but I appreciate you guys listening in to all these questions being answered. As always, I love you guys. Until next time.